Hey traders, Raghee here. As we take a look at what has been a significant rally today, right? That's probably a pretty decent understatement. There's a couple of things I want to mention as we take a look at the intraday trades. And if there's a secret to my day trading apart from my volatility studies or my volume studies, it's actually a very simple non-indicator, non-secret squiggle, and it's the daily candle. Taking a look at the way that sentiment shifted Monday into the close, we left more than about half of the range in the form of a wick. Now, that doesn't necessarily guarantee an up day, but we definitely can see a certain rebound from the lows of the day. Okay, well, that's a start. If there's a habit that you could form, and it's one that I definitely dove into in detail in my Day Traders Playbook class. I'm sure some of you took that this year. We spent an inordinate amount of time talking about daily time frames. And you'll notice, even on this layout, I've got a 2-minute, a 5-minute, and a daily. And that daily never leaves my sight in terms of when I am day trading between 9:30 and 11:30 a.m. Eastern. And the reason's pretty darn simple. Where we are in relation to the open, high, low close with emphasis on the close can actually bring us a lot of clarity about support and resistance for the following day. So let me show you one of the things we looked at this morning in the room. This low here, not a great setup. It's decent. There's no reason to be overtly bearish. We're sitting at lows, and we can see that the structure is struggling with keeping support. So we're looking for something that's either going to sort of finalize the process of, hey, let's not take this trade, which is always a perfectly fine alternative. Flat is a position. Or we could say, well, we can control risk and look where we are as we are testing this aggressive V-score low and this hourly price movement range. You know, if there's a spot that we're going to attract a bid, this is going to be it. And that's a really simple process that I learned early in my career because, and this isn't just a well-chosen example. Here's another one, right? Here's your support, right? And again, the trick is, in the case of the S&P, it was a little bit easier because it coincided really, really nicely. But you can see here's 15.7, right? There's your line. And we made it about 50 points below that before we rallied. And so, again, if we know that above that close, we could find bullishness, and below that close, we can find bearishness, the way you stay out of trouble is you always focus on exhaustion setups, not momentum setups, but exhaustion. Wait for the market to exhaust, because that means you're going to sell from higher, you're going to buy from lower. And that's where you don't get rope-a-doped into a move like this. Or if you do, you keep a very, very nimble approach to it. I hope that helps. That's something we talk about, whenever we're day trading in the rooms, whether that be the Simpler Futures room or my Sector Secrets Mastery. But look for these very, very easy to identify levels using that daily time frame. I'll see you in the next update. Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.